Hi, this is Susan Tierney with the Owner Finance Network, and I'm here today with Scott Horne for one of our segments called Ask the Attorney. And what we're going to talk about today, and I'm going to ask you some questions because you're the pro at this. You've been doing this for 30-something years. Protesting taxes.
So property taxes.
Property taxes, yes.
I can't protest IRS taxes?
No, you can't do those. You got to pay no matter what. They're going to get you.
Taxes and death, right?
Well, yeah, two things you can't avoid in life. Anyway, I'm going to ask Scott some questions that we get from people all the time. And I think the most startling thing for me, because we do this all the time, is probably, I would say 90% of investors do not protest taxes. Would you agree with that?
I do. And they should.
They should.
You know, one of the things we have done historically is we have protested our taxes on every property we've owned, always. And it gets a little bit embarrassing because we are usually the lowest valued property on the entire street, sometimes the entire neighborhood, but we still go back.
We still go back.
And we protest them again.
And I say that we win probably 95% of the time.
Well, it depends on many factors, obviously.
Okay.
And I think it depends on your market you're in. Right now when you're in this huge uptick marketplace here in Texas, things change a little bit just because there's such a different dynamic. But typically in a normal environment here in Texas, and even I'm sure in other states the same thing holds true too, you have the ability to protest your taxes. And, as investors, Susan, when investors are buying homes, we're usually buying our homes at some discounted price. And of course, we're buying them at that discounted price because most of the time they're in some form of disrepair, right?
Right.
There's some negative issue going on with the property that is why we're able to buy it at this discount. Now, why did the homeowner that we bought that home from not do this? Don't know.
I don't know.
Most of the time, they just don't know you can.
Right.
I think ignorance is the biggest thing that plays into that out there. But and what happens is the city, they're going to keep raising your taxes as much as they can until you cry uncle.
Right.
Now, I think when you get into more sophisticated parts of town with more sophisticated people, they're going to be a little more savvy, and they may have done these kind of things.
Right.
And they try. But so often, we investors are buying distressed property. Oftentimes, we buy in low to moderate income neighborhoods. Sometimes we're buying very nice neighborhoods, I get it. But we're buying, hopefully, at a discount. And it's recognizing that when you're buying that home at a discount, you're buying it for a reason. The reason it didn't sell at market value is there's some negative issues. And our job is to go and point these things out to the taxing authorities and demonstrate why they're being overpriced for property taxes.
Right. Okay, so tell me, when do we protest? There's several different ways we can do this, right?
There are. And I think, again, I'm going to comment on Texas.
Okay.
I don't know what other states do. I'm sure they're similar or the same or different, who knows. But here in Texas, they've changed it just recently so that you can protest your property taxes from April 15th, that good old day of April 15th, I'm not sure why they chose that day, until May 15th. And so that's the window. Most people think that that's the time to file for your property tax protest out there. Now, let me point something out. When you go out to do this, you're not protesting the value of the property on that day. What you're doing is you're going back to the very first of the month, or of the year.
January 1st.
Because they assess the value here in Texas on the value as of 1/1 of that year. And I find this very interesting. I've had houses that we had validation that it burnt and destroyed the home on, let's say, the 6th of January. But because on January the 1st, it was still in good condition, you were not able to protest for the entire year. And so it's understanding those things, that it was the value of that home as of 1/1.
Okay.
So maybe we buy the property in January, March, April, May, up to May 15th. Can we go down and file for taxes? Between that 30-day window, we can do it. And of course, what we're going to do is we're going to argue to the property taxing authority that the value on 1/1 was less than what they have it taxed at, and for the various reasons along the way. I know we're going to talk about that shortly.
Right.
So it's recognizing you can do it. It's realizing you can do it. And one of the things I always talk about is our business is not just about making money. It's about learning how to save money.
Mm-hmm.
And this is a mechanism that allows us to save
Yeah.
money. And if you can protest taxes in year 1, so often that carries over to year 2, oftentimes to year 3, and sometimes further. So you're getting that benefit for many, many years running.
Right.
Not always.
Yeah.
Depends on your marketplace. And so this can be a valuable tool for saving money.
Yeah.
And
So,
making money.
yeah, so say if we have 100 homes in our portfolio and we save $1,000 on each home, that's $100,000 a year we saved and didn't have to pay
And you
taxes.
said you weren't good at math.
I am when it's that easy. Okay, so you say we can only protest April 15th to May 15th, but what is this thing about the 1/3 rule that you can protest anytime?
Well, a lot of investors don't understand that there's a rule, and I call it colloquially the 1/3 rule.
Colloquially?
Familiar language.
Colloquially.
Yes.
Colloquially.
Look it up.
Okay.
And when you're a lawyer, you use 50-cent words, not nickel words. So along the way, there's a provision in the property tax code, and that provision here in Texas is called 2525D, which is the actual code citing.
Mm-hmm.
And what it says is if the property is assessed for more than 1/3 of its value, then you can protest that property at any time during the year up through January 31st of the next year for the prior year.
Okay.
So it doesn't matter when you buy it, whether you bought it in January or February of the current year, all the way up through January 31st of the next year, you can go back to the prior year and protest if it's being overassessed by that much. Basically, it means that they've really messed up and they've missed the value by a lot.
Okay, does that happen a lot?
It happens a lot. And investors don't recognize that. Think about the number of homes that in our businesses we've had a chance to deal with that need substantial remodeling, substantial repairs to get to true market value.
Mm-hmm.
The county, they don't get a chance to go in and see the houses. They don't see the disrepair. They don't see all the issues that we know. They don't know the foundation is bad. They don't know the sewer line is bad. They don't know the roof is bad or the AC is bad. They didn't go inside and see all the negative issues that are there.
Mm-hmm.
So they don't have the ability to compare apples to apples, really. And it's not their job to do that. They don't do those kind of things. It's our job as the property owner to point these things out to the taxing authority as to why it's overassessed. And so there's a formula for looking at this, and I don't want to get into too much detail on this, but basically, if your house is being assessed for, let's say, $100,000,
Mm-hmm.
I think you can take that, divide it by 3, multiply by 2. And so if you can show that the property is worth less than $66,667.67, then I think you have the option to protest at any time those taxes.
Even if they go, oh, no, there's no way, and they say no, at least you got in the door, right?
Well, the key is you have to get in the door and you have to make the claim. Why?
Okay.
Well, maybe you bought that house for $50,000. Okay. Maybe you just got a phenomenal deal and it's really still worth $100,000, right?
Mm-hmm.
But maybe it's really worth $50,000. Why? Well, when you go in to protest these taxes, you take your settlement statement first. That shows you that you bought it at X dollars. Next thing is was this property listed to the open market? Was it an market sale? Was it arm's length or not?
Yeah.
You have to be able to help validate that.
Right.
Maybe we have to go in there with a contractor's repair takeoff.
What about all the pictures of how bad it looks?
Well, you take your contractor's repair takeoff,
Mm-hmm.
showing what repairs need to be to put the house to market value.
Mm-hmm.
You take pictures demonstrating the house, and you go in and you make a case.
Okay.
Maybe you go take the time and you spend maybe $100 and you have an appraiser do showing them the pictures, the repairs, and you ask them to do a market value for you. Maybe you can get a realtor to do a broker's price opinion. Maybe you can get that opinion of value from the appraiser. you go in with enough information to support your position. So imagine for a minute, if you're being taxed on $100,000 right now, and you can reduce that value, say, let's just say not to 50, let's say you can get it down to 60,000. Okay, $40,000. Well, here in Texas, that equates to about $1,200 a year. Now, is that just for 1 year, 2 years? What? That's on a $200,000 house using the similar numbers, or 300. That could be $2,400, $3,600 a year of savings out there. Now, a little known tidbit. What if you bought a home that was being taxed at, let's say, $200,000? Say this home's in terrible condition. Let's say you bought it for $100,000. You bought it so cheap because it really needs $50,000 to get to market value. It's just in terrible condition. And we see those all the time, and I know that the investor community does too. So when you bought that home, let's say you bought it on July the 1st, so 6 months. The seller gives you taxes based on the $200,000 tax proration, right?
Right.
And let's just assume for conversation's sake here that that's $6,000 a year in taxes. And so they give me $3,000. So if I don't do anything, end of the year, I have to pay $6,000 in taxes, right? But I go in, I do my tax protests using this 1/3 rule. And let's say because I bought it in July here in Texas, I'm not able to protest under the standard protest time frame because I missed it.
Okay.
It's just the way it works. It goes to the next year, right? Unless you know this rule and you know how to go in and navigate it properly. And so I go in and I show the taxing authority and I demonstrate why the house is worth 100, not 200. And they go, we agree. And they give me the value of $100,000. So now at year end, I only owe $3,000. Well, the seller already gave me $3,000. I just saved $3,000, didn't I? It's simple math how to do that. It's worth looking at on every equation. It's worth learning how to protest taxes and doing things. And if you don't do this, the taxing authorities, the cities and the counties, they're going to continue to adjust your property up. Why in the world do they ever have a reason to go down? Rarely do they. You know, it always goes up that way. And so learning the basic precepts of doing some things really do work.
Okay. Can I protest property taxes on a house that I bought sub to?
Okay, so you go out and you buy a home subject to a prior owner's existing debt. So the first question is, the thing we have to answer is, we become the owner, right?
Right.
So now we're the owner, we have the right to protest those taxes. And by the way, we can protest those taxes even though we buy the property in July and we didn't own it on January 1st. The question is what's it being taxed at now? Am I the owner and do I have the right to do it as of 1/1? Yes, I do.
You do, even though you didn't own it 1/1.
Right.
Okay.
But I bought it and I'm subject to paying the taxes now for the entire year.
Oh.
So I buy it subject to, and it doesn't matter how you bought it. The key is what's it being assessed at? How'd you buy it? And legitimately, what is it worth? Going through the various things we spoke about and how you demonstrate value to get the market value out there. So absolutely, you can protest taxes even though you bought it subject to. It doesn't matter. The key is, do you own it or not?
Okay. What if I'm just learning about this and I never knew you could do this, but I've already sold my house on a wrap?
Okay.
Is it too late for me to go back and protest taxes?
Well, you know, I'm not 100% certain of that. And sometimes I tell people, because I'm an attorney, I'm an investor, I'm not a tax professional, and there are people who do this professionally and help you protest taxes. And I'm sure there's a lot of people who may already use tax professionals to do just exactly this. And there are big companies that do this for large, massive commercial projects, downtown skyscrapers, etc. There's a whole lot more that goes into that. And the residential side is a little bit different. Now, imagine if you have a $5 million home. Obviously, that's a lot of money in taxes, right? Here in Texas, at least. Versus a $50,000 home, not so much. But it's all relevant and it all adds up. So What I have seen is if you no longer own the house, the question is, can you protest it? I think it belongs that maybe I filed my house for protest and they haven't had a chance to hear me yet, and I've sold it. I still filed it while I was the owner, and I get a chance to protest. Because oftentimes, if I'm going to do that wraparound mortgage to the back end buyer, I'm probably holding the escrow, which means I'm going to be out of pocket money going in. So I do have a vested interest in trying to do that still.
Okay.
Instead of just looking to the buyer to make taxes going forward. So it's worth doing in that instance, I think.
Okay. What happens when first of all, what is an ARB hearing?
An ARB. So that's really an acronym for, I think it stands for Appraisal Review Board.
Okay.
Is what they call that, and the short is ARB.
Okay.
And so often, we can go down, and when you go to protest taxes, you meet with a county appraiser. One-on-one, you talk about your deal, and they make decisions for you. And they are going just nuts during that 30 days, because I'm sure there's tens of thousands of people who want to protest taxes out there. And so along the way, though, if you disagree with what that appraiser is giving you, you have the right to go to the Appraisal Review Board. And in that situation, it's a panel of 3 people that are usually citizens,
Mm-hmm.
maybe realtors, other people. And you have a panel of 3 people along with a local appraiser, and then you make your argument to that panel as to why the appraiser was wrong, why you're right. And you let this panel make the decision. Sometimes you win,
Mm-hmm.
sometimes you lose. I think here in the Dallas-Fort Worth area and the surrounding counties, oftentimes we tend to lose. I don't know why, it's just the way it is. I can give you a lot of hyperbole on those kind of things. I might want to do that right now.
I bet they pay them a lot of money to say no. What do you think?
They get paid very little.
They get paid nothing?
They get paid very little to do anything out there. Now, if you don't win that ARB hearing, as we call it, and you want to go to the next level, then you can go to binding arbitration, or you can file suit in district court against the county. And again, the key is do you have a legitimate position?
Right.
I can give you examples where I have a home that had been vacant for over 10 years. So imagine the condition of the house. First off, vacant 10 years, nothing used, everything was bad. Roof, windows, sewer line, HVAC, electrical system, no utilities on for 10 years. Everything had to be updated. It was a huge project to do all this stuff and work again, and cost a lot of money. I think the rehab was in the $60,000 price range. What I found incredulous in this one instance was that the appraiser for the ARB hearing when I was there said these were all just basic cosmetic updates. And of course, I kind of looked at this guy and I said, a new roof is a cosmetic update. Replacing old windows that are broken, etc., versus new ones is a cosmetic update. Replacing the holes in the ceilings, the HVAC that doesn't work, the electrical panel to bring it to code. These are cosmetic updates. It was incredulous. And so for the first time in my 30 years of protesting taxes, we filed our arbitration. Haven't gotten there yet, but it'll be interesting to see how that goes. And I believe at this point in time, we're going to win that.
What property is this?
Well, we'll talk about that later.
Okay, I'm curious. This is just off the cuff. How do they come up, if they're assessing the value on January 1st, do they come walk around your house, look at it, walk the neighborhood, or do they just go on MLS? How are they determining what your tax rate should be?
The other, 11 months out of the year, the appraisers are tasked with the duty of validating taxes. And typically, at least here in Texas, I believe, I'm not 100% certain, I believe they go by the properties. They're assigned certain areas. And they literally drive your neighborhoods, and they look at your properties, and they take pictures. And of course, with all the internet resources today, you can see other things out there which help them out as well. Do they come in and look at your house? No. That's why we have the ability to protest. All they get is a snapshot of the neighborhood and of the exterior home. Do they drive down the alley? I doubt it. I mean, if there's a big issue on a big property, they might do things like that. But I think in traditional neighborhoods, they're driving your street, taking pictures of your houses. They're looking at sales in your neighborhood just off of multiple listing, just like a realtor would. and assessing value, and they're assigning a condition to it. So if your house looks fantastic on the outside, the yard is neat and clean and manicured, everything looks perfect, they're probably going to put you at an A+ type rating, right?
Mm-hmm.
Instead of maybe a D rating or a poor, as they call that. And they put different levels based on what they perceive to be the condition.
And then every year, do they raise it like a cost of living raise? They go up a little bit every year to pay?
No, I mean, they might, well, usually they look at it every 3 years, so they don't have time to do everybody that way. Could they? If they believe the value is increasing, could they look at sale comps in your area and raise it up every year? I think the answer is yes, they have the right to do that.
Okay.
Which is why, again, being diligent in protesting your taxes to counter them and show them why they shouldn't be doing that is the way to do it. You know, you can get, when we go in and talk to the appraisers, you meet with the appraisal review board, and I said you need to have your, maybe as an investor, you want your settlement statement, you want that contractor's repair takeoff showing that big number what it costs to fix the house. Maybe you got a broker to get you a
BPO.
A broker's price opinion. Maybe you got that review appraisal by an appraiser, or maybe you just get your own sales showing similar homes and how they are so wrong on your value. Now, how can you buy a house for 100 when everything else is selling for 200? Who in their right mind is going to do that?
Right.
And why? And the key is giving them the ammunition to help you and help them make the right decision for your property.
Got it.
So I think those are great things to talk about.
Yeah.
I think they're great things that every investor should consider doing.
Absolutely. You can save a lot of money, and that's
And
just...
if it can take me an hour to go down and talk with an appraiser on one property, or maybe I get a chance to do 5 or 10 at a time, who knows?
Yeah, we've done multiple ones
yes.
at one time.
It's well worth it, and
Yeah.
I might be able to save $1, $2, $3, $5,000 for that 1 or 2 hours of time I spent. And I'm not sure where you can make that kind of money anywhere else. And if you add it up for 2 or 3 years down the road, maybe those a few hours help save me $10,000 or $15,000. So guys, take the time when you get a chance. Always consider protesting your taxes. Find out how in your state, in your city, how you do this the right way.
Right.
And make it part of your investment equation.
Well, thanks for answering all of my questions.
You're welcome.
And you can ask Scott questions on our Ask the Attorney segment by emailing me at info@theownerfinancenetwork.com. Just email your questions and we will include them in our next segment.
Thanks, guys.